Hi, it's actually here from the Traders Circle. Welcome to my weekly trade planning session. It's Monday the 15th of July. So I'm just going to get straight into today. So on my hot list for the coming week, we've got Euro USD. So my bias for Euro USD remains neutral at the moment as we continue to monitor the pair for clear signs of direction. So at the time of this video, the price is currently hovering around the 128 level. And as discussed last week, you can see that it's sort of hovering in between this ascending and descending daily trend. So last week we were looking for, although we were neutral, we were looking for signs of bearish activity, and although we did get this rejection candle, if you drill into the lower time frames, it's just a little bit messy. We got a nice strong finish to this 8-hour bar, slight rejection. So this, would be looked at as more of a continuation pattern to the upside. Then we got rejection and this 8-hour bearish engulfing. So what we look to do then is see how this 8-hour bar reacted. So if this, as you can see, it's almost a bullish engulfing, a double bar, sorry. So we've got this bearish engulfing followed by almost a double bar. It's a strong finish anyway. So for us, it's just a little bit choppy and messy. And this is what I'm referring to when I talk about price action. So we have our areas of interest, and what we're going to do is monitor price action if the price comes within those areas. And it's the price action that governs our decision on whether we take a short position or a long position. So this was on our hot list for last week. We were neutral. We are still neutral. But what we're seeing here is the formation potentially of a head and shoulders pattern. So we've got the head, shoulder, and the head. I'll just draw that in. So we've got a head there. Shoulder there. Head. And this is the area that we're looking at taking potentially short positions. Now, the reason why we're neutral is because this could just retrace, break, sit on top of this trend line, and then continue its ascent. Or it could continue to stay below this trend line or break out and come back below. And then what we would be looking for is this kind of action, price action forming, as you can see on the left shoulder. So ideally what we'd like to see if we're looking for short positions now is for this to continue tracking this trend line, and then we'd be looking for bearish price action around this green zone here for a play to the downside. We're going to be careful around news. We've got some strong US data throughout the week. So we've got high impact data later today at 1:50, again on Tuesday, and some more on Thursday as well. So there's quite a flow of high impact data for the US dollar. So we might see some just sideways action leading into that. And if the data is weak today, we might look at the bias turning short, sort of midweek. So what we do is we set our alerts. So I'll just keep one around this sort of area here, so it marries up with this area of resistance, and I keep another alert below the current price action. So I'm constantly monitoring above and below the current area. So when those alerts go off, I let the market come to me and I can view what price action is doing at the time. Euro pound. So we continue to hold our short position on euro pound. So our medium to long term bias is short, and we're currently short from 0.89685 after seeing a retest of the 0.8990 resistance level. Our stop is now above 90.50, 0.9050, and we've got a hard stop just slightly above that to give an extra 10 pips. So our hard stop's at 0.9060. So I've said now for that we are looking at short positions off this monthly trend. Now I said last week that we'd probably see price oscillate in this ascending triangle for this foreseeable future. Now we are long-term short on this. Our bias is long-term short, as you can see. There's no real change from last week. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks now with no pullback, no significant pullback. We're still holding on to this trend line, but what we are seeing now, I'll just zoom in a bit further. Get rid of that now. I'll just zoom in. We've seen this roll over. We've had a nice indecisive close to last week with quite a good rejection. So we initially broke out of this weekly monthly trend, and then we saw strong rejection come back within that zone. So we're still monitoring price action on this new week. As you can see, we're taking a push up. That's generally what the market does on a new week. It makes its upper shadow and then rejects before it comes short. Sorry, I've got a bit of a cough this week, so I have to keep putting it on pause. So just bear with me a sec. So what I was saying is the market does tend to push up first before it makes its decision to come short. So what we are seeing now is, if you look on this daily, we did have a weak finish to last Friday, and we did close below this ascending trend line. We are seeing the bears looking to take control, but we still need to remain patient with this. This is why we've got to stop above this, where this ascending trend line triangle meets, where the two trend lines meet. Our stop loss is, our hard stops at 60, and we've got an alert set. Actually, we haven't. Let's just set that there. Here we go. Bring that a bit further down. Yes, so we're monitoring price action within these areas. So we just need to remain patient with this. It's due a significant pullback, and as with any longer term trade, it can take several days, if not weeks, to pan out. So no real change from last week, apart from it's broke through that lower trend line on this ascending triangle, and we're just currently monitoring price action. Again, we've got some high impact news for both the pound and the euro this week, which will certainly cause movements in the market. So we've got high impact news at 9:30 pretty much every day this week for the pound. So if that data comes in strong, then it's almost certain we're going to see a strong move down as this as people start closing out their long positions on the euro. So this move up now could just be a speculative move to get the best price in readiness for the data tomorrow and for the rest of the week. USD Swiss. So our medium to long term bias for USD Swiss is short. We're currently short from 0.98293 and stops above 0.9940. We saw a strong price rejection and a weak finish to June. So just show you the monthly time frame. So we saw a strong finish and a break of this monthly trend on June, and then what we've seen here, if we just zoom in further, I need to keep this on my chart. So let me just hide that. So if you can see this upper shadow, it's come back to test this moving average here. So this area of dynamic support, resistance, and then we saw a strong rejection. There's no lower shadow on this monthly either. So if we drill down to the lower time frame, so this is a weekly, we got on this descending trend line here on the weekly time frame, we had a strong close, bearish close. More importantly, it closed within the upper trend line for this descending trend line on the weekly time frame. And then if we drill down lower again to the 4 hour, we took our position on this retracement here. So there's the trend line. We've come back, closed, come back, closed again, and then we've retraced, and this time on this 4 hour bar we rejected right on this trend line, had a strong close below the trend line, and this is where we took our trade. So we're currently short, and our area of interest for short positions is between 98.60 and 98.30, where you should monitor price action before placing any trades. So if we go back to the higher time frame, so the profit target really will be dictated by price action, but we will certainly be looking at coming towards this middle area here. So profit one, you're looking at 200 pips, so 220 to 250, something like that. Depends on price action, but I'll certainly be monitoring that area for our PT. And depending on how it reacts, we will certainly lock in profits around these sort of areas here. But this is a kind of range trade, so we could even be looking at another 300 pips after that. So really good risk to reward on that trade, potentially. Euro Aussie. So our bias for Euro Aussie is short. We saw price pull back towards the 162.50 supply zone, where it was met with strong rejection and continued short. Now we can see a head and shoulders pattern forming here. We have missed the opportunity to get involved here. This was nice price action here. We can't get involved with every trade due to risk. If we're currently, on our hot list, if we've got 7, 12, 15 pairs on our hot list, then we could be in 3 or 4 running trades, and our risk is allocated. It doesn't obviously stop the market from continuing. So although this is a good trade, we can't get involved in it. We can't always get involved with it, and sometimes we do just miss them as well. We can't have our eyes and ears to the market 24/7. So this is a perfect example of price action within the zones that we created. So this was the zone. These are the areas of interest. This is the head shoulder pattern. We've got strong 8 hour rejection bar. If we drill into the lower time frames, you can see, an engulfing pattern, another engulfer here, and then we've got the trend line forming. So perfect textbook trade. So what we can do from here is I've got an alert set here. So what we could see is this either reject, come back towards this area, even this area, but it's likely to come back towards this consolidation, these sort of areas here. and then reject if it's going to break. So we could almost see like a double top, or it's not really a head and shoulders, but it's a head and a left shoulder before we continue short. Or this could continue to reject and come back and test these areas again. We can't get involved because we've got our risk allocated, but that doesn't stop us monitoring the markets, because if we come out of a trade for break even or profit, we've then got the opportunity to take these positions if they come about. So that's Euro Aussie. Right, so pound dollar. So our bias for a lot of the pound pairs, really, but pound dollar is long but cautious. Now, I said last week that we wouldn't be interested in getting involved in any long positions until we saw a strong close. Just bear with me a second. Zoom out a bit first, actually. So here's the trend line. So we've adjusted it from here to here now. So we've got one touch, two touch. So we broke down below this trend line and then came back up, rejected, and closed above. So we're still not interested in getting involved. We are currently monitoring price action. This raises interest. I said that I would be interested in these sort of supply zones, demand zones. Now, it's done exactly what we were hoping it to do. So it's come back, closed above this trend, had a nice strong finish to Friday. It's early in the week. We do have a lot of high impact news for the dollar and the pound throughout the week. So it's unlikely that we're going to get involved this week. And it doesn't matter with this pair, because the long-term bias for the pound, once Brexit has been resolved, is potentially to the upside. So, it's worth just keeping your eye on price, the fundamentals, and then just letting the market tell you which way it's going to go. So if this spikes up, comes back to test this trend line, retraces, breaks through, and then comes back and sits back on top of this trend line. And the only way it's going to do that is through resolution in the current economic political climate and stronger fundamentals. So don't worry too much about trying to get involved in this drama. For price to get to this area, break, come back, and then sit on top of this trend and then retrace, the political and economic climate has to sort of support that. So that would be much more of a safer bet. So I just continue to monitor what's going on fundamentally, because it does feed into other trades as well. But if you do want to get involved and have a tight stop, bearing in mind it's much more higher risk, you can sort of monitor this supply zone here with the view to taking a trade with a tight stop. There's nothing wrong with doing that. So you could get involved here with a 90 pip stop, but are you going to hold it long term, or are you going to be taken out around these levels? You see, so the risk to reward on that doesn't necessarily stack up. So for me, I'm just sat on this, just remaining patient and currently monitoring it. Pound CAD is slightly different. I've got involved with this trade. Two reasons. If you look at the weekly time frame, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We're on our 11th week with no significant pullback at all. Yes, we have broken this weekly trend. So it's likely this is going to come up to test the trend or this resistance area before rolling over and coming short again. So this is more of a shorter term or intraday trade. The reason why I've got involved is simply because of the tight stop here. So if you look at, I think I'm below 45 pips actually, so somewhere around there, yeah. So it's just a speculative move, very tight stop. I may get stopped out, but if I do, I do, and I'll just continue to monitor this pair for, again, a speculative move to take advantage of a profit take that's due at some point. If you look at how price acted here, you look at this, so at some point you see this doji, see a doji here. So at some point it may push down further, might come down to test these areas, but at some point we're going to see some kind of profit take occur. So that's pound CAD. There are a few other pairs that I have got my eye on, but I've not got them on my hot list just yet. It's going to be a short week for me. I go away on holiday from Wednesday, so I will be online after Wednesday. But my hot list is quite short this week, just because I want to focus myself on just a few opportunities with me having a short week. So that wraps it up for today. So I hope you found that video informative, and I'll speak to you in the next video.